Hello everyone, and it's been another day in markets, but it's been a relatively quiet day in equities. In the currency front, of course, we saw further decline in the Australian dollar, just as we've been forecasting, and that is by no means over, that down move. We're also going to see further weakness in the euro, I think. I mean, it's very difficult for anyone in the world to go and say, you know what, I think I'll go speculatively long the euro because I don't think there's going to be any conflict. Apparently it has all to do when the ground freezes over, which is expected to be in mid-February, if not earlier. So that's the kind of time frame we're looking at. Just as we hear that in the US Senate they're passing bills for greater military support and military spending in favor of Ukraine. So if Putin was thinking of doing anything, he's starting to feel the pressure to go sooner rather than later, which would be very unfortunate, of course, but we have to be aware of that. So still feeling there could be upside for the US dollar, downside for the euro and the Australian dollar. Still thinking equities, are, even after this big decline in equities, and remember the Nasdaq's fallen about 18%, equities are still overvalued. They still have ridiculous valuations and they're still vulnerable to a profound, serious correction, which is what we've been forecasting for some time. On the economic front, we've seen some bits of good data out of Asia today, a little bit of improvement for Vietnam, and in Japan, Taiwan, in terms of manufacturing and jobs, so that's good. Nothing to write home about, but improvements. So we are returning to normal. My point is that normal is below trend growth for the United States, China, probably Europe, although it didn't have much trend growth in the first place, and certainly in Australia. Now, I put out an article today talking about how the Sell Australia theme has certainly worked for us. We've been calling that for a long time, and I think there is more to run in that. That doesn't mean we won't be having some rallies. And if you did have some good profits on the board, and let's face it, all of you are now incredibly rich because you all went short at the top when we said, famous last words, I may as well go make a jump from here after saying that. I've jinxed myself. But no, we'll continue to get it right. And I must admit, I'm starting to feel more in a mood of I'd be prepared to buy or sell the market depending upon price action and those sorts of things now, whereas before I was very much just in the mindset of you need to sell, you need to sell, you need to sell. That's proven to be the correct strategy, but from here do we keep falling? And I do think the AUS 200 could fall to 6650, and you know, the pressure is still there. If we're going to see a rally, we should definitely see a rally in the US market tonight. So Friday night US trading, if the market is bottoming to any degree here at these levels after recent falls, we're going to see some upside in New York. Now, if that upside is only muted, I will be very aggressively bearish next week. If we get a big move to the upside with a firm close, then we're either sideways or basing, and that could be a welcome relief for many people, many investors. But I think the most likely outcome is small upside, a little bit of a mixed bag, and then again vulnerable next week. If we saw selling to new lows in the next 12 to 24 hours, 12 to 18 hours, then I think you'd be more concerned about a correction in equity markets of a quantum level higher. And then you have to start thinking about corrections. As I said, Nasdaq was down 18% at one stage. But then we'd have to start thinking in terms of 25-35% correction generally for major Western equity markets, and we still have more to run. So I'm still suggesting stay short the Australian dollar, stay short euro. Gold, got that wrong on the day, and been stopped out on gold myself. I've just bought back in though. I think that's a high risk trade. I'm not necessarily suggesting that to anyone. But nibbles as the gold price moves lower here is probably going to still pay off in the longer term. So still bearish equities, cautiously on the day, bearish the Aussie and Euro, and that of course is partly a function of a strong US dollar outlook. Thank you very much. I hope you have a very good day and all the best for your weekend. Clifford Bennett, Chief Economist, ACY Securities.